that is an outlier in trade today, given the fact that we are seeing a good move in the auto pack. And talking about the auto pack, we have a new kid on the block, you could say that. We have Ather Energy that listed on the bourses. It listed at a premium to the issue price of around 321 rupees per share. But what's the outlook going ahead when you talk about Ather Energy? What should one watch out for from this company? We have Tarun Mehta, who's the Executive Director and Chief Executive Officer of Ather Energy, joining us this morning. Thank you so much, Tarun, for joining us on ET Now, and congratulations to you and your entire team at Ather Energy now that you are a listed entity. So help us understand about your plans going ahead, given the fact that you are planning to spend about 900 crore rupees, I believe, on a new plant. But you know, there is a lot of commentary coming in that your existing capacity is actually underutilized. If you can help us understand about this, how your new plant will help you actually, or the company, or better themselves going ahead.
Right, thanks, Cheryl. So today is obviously a very important day for us, and we are very grateful to all the public shareholders who've exercised their option and invested in us and bought into the growth story. We really have bet on premiumization and the upgrading Indian consumer in a big way. And last year was a very big year for us with this new product that we launched, Ather Rista, which was a family scooter. Our sales have just gone a very amazing new direction. So just to give you some context, our overall capacity is about, out of the current plant, 35,000 units a month. Back in October 23 festive, we did 10,000 units out of that. October 24, just within 3-4 months of the launch of a new product, we did 21,000 units out of a total capacity of 35,000 units. Honestly, at this point, I'm a little worried about how October 25 will look like, and when we're really doing everything to make sure we can really scale up. While further scale happened, first the products landed really well. It's landed really well, particularly in the non-South markets, where historically Ather used to be weak. And because it's landed well in these markets, we can now add a lot more distribution here. So we are very bullish about coming growth because of the response to the product and the opportunity to add new distribution here and just really hit it out of the park this year.
So Tarun, I just wanted to understand then, so how do you see your market share and profitability actually evolve from current levels, given the fact that yes, you are a formidable player when you talk about two-wheeler EV market, but I just wanted to understand, you know, how should one actually read into your numbers, your market share performance, because there is a lot of disruption in this space, isn't it?
No, and actually, if you think about it, Ather was the first pioneer to bring a lot of that disruption, whether it was touch screens, connectivity, onboard chargers, fast lithium-ion batteries, fast charging, everything. We believe that technology will continue to disrupt our industry quite a lot, and companies that are really set up to play on that, who are really set up to respond to this new Indian consumer, this evolving mindset of upgradation, I think those are the companies that will really continue to succeed well. In our case, we've been very disciplined with capital. So while we're obviously super bullish and excited about this volume growth, even if you see our past 11 years track record, capital is something that we've handled with a lot of care. FY25 3-quarter data, you will see that our losses have come down while volume has gone up 45%. But particularly what's really been heartening is how our unit economics has trended. Margins went up from 9% to 19%. And remember, Ather does not run its own stores. So this is a very clean margin, and this is without PLI. So in our opinion, this is one of the most bulletproof P&Ls and one of the most bulletproof margin structures you will see in our industry. So we've been very disciplined here, which is how losses, not at a percentage level, but on an absolute level, have trended down. And further volume growth from here will continue reducing this, hopefully on a path of EBITDA and then cash break even.
Okay, Tarun, hi, this is Snehi also joining in on the show. Help us understand what is a sustainable volume level for you going ahead, and at what volume level you would reach EBITDA break even by. What's the timeline for you to reach this volume level as well?
Right. So obviously I will not be able to give a specific guidance on EBITDA break-even volume, but let me just give you a few pointers for people to do their assessment. At a volume of roughly about 10,000 units a month in FY24, we were trending at about minus 35, minus 36% EBITDA. We hit about 15,000 units a month in the last few quarters, and just that 50% growth has already taken us to -20 to -23% EBITDA. And I believe we're really just scratching the volume journey for us in this industry, because I think we are at the intersection of all the growth levers, if you think about it. Within two-wheelers, scooters are outgrowing motorcycles. Ather's building scooters. Within scooters, electric scooters are the ones that are growing several times faster than petrol scooters. We're building electric scooters only. And we've got a very razor-sharp focus there. So we believe volume for the industry, and obviously ours will trend very fast. On distribution, Ather had 260 stores pan-India in December. Our peers have been at between 700, 800, even 1,000 stores in some cases. All those stores many of those stores are in cities where Ather has not even opened its first distribution. Now, as we start unlocking that with our asset-light dealership model, we are very bullish on driving an incredible growth. Remember, just think about our market shares. Well, pan-India, we're at about 14-15% market share. South India, Ather has been the leader at 23, 24, 25% market share. Even Gujarat on the western side, we've now touched 20% market share consistently. And I think that gives you a sense of what is the kind of stable market shares Ather can easily push towards with its focus and new product delivered growth.
So Tarun, I just wanted to ask you a question as a consumer, right? Because as a consumer, we have had a lot of talks about what exactly is happening in the two-wheeler EV space. That has actually made a lot of investors also nervous, as a consumer also nervous. I wanted to understand, what sort of strategy are you adopting to counter all of these competition from legacy players, or for the matter of fact, new age companies just like yours, a competitor which is listed in the bourses as well. What's your take? How are you adopting strategy? What's your strategy going ahead?
I think this is an incredibly hot area, and that's going to be the nature of the game given the kind of growth we are seeing in our industry. Like a 30-40% growth year, and analysts will call that disappointing. I think that gives you a sense of how amazing hot this sector is. Every company has its own strategy. Our strategy has been focused on going after the upgrading Indian customer. We believe with 70% of the middle class households already owning a two-wheeler, that's going to be really the growth driver for our two-wheeler industry, this upgrading customer. We all grew up with Activas and Splendors and Pulsars in our childhood. Now is the time to upgrade into newer and better products. That's what everybody's trying to build. That's what we at Ather are extremely focused on. Somebody will say their strength is distribution. For somebody, it's their balance sheet, so on and forth. For us, it's always been our singular focus on cracking the right customer, really understanding their psyche, going after the upgrading customer with great quality products, and really a lot of discipline and focus on cash. On cash particularly, and margins particularly, one more thing I want to highlight here, which has turned out to be a very strong Ather advantage, is our business's ability to make money off software. That's been a new lever of growth and margins that we've been able to unlock. While others have also attempted, I would say Ather's had probably the highest amount of success in it. Ather Stack is today is a 53% EBITDA margin product for us, and it's driving almost 6% of our top line. So it's things like these that are really Ather's strength, our software, our ecosystem. We run the largest fast charging network in India today for electric two-wheelers, and a focus on quality with the upgrading customer.
Then, wish you all the very best for the future. And given the fact that now you're a listed entity, which means that more scrutiny your way, actually, Tarun, but all the very best for that. And I'm sure you'll be poised to counter all of that. Thank you so much for being part of the show and talking about the company, the growth prospects, as well as what should one watch out for when you talk about Ather Energy. Thank you so much for being part of the show. All right, so that is Ather.
If you like this video, then like, share and subscribe to ET Now.